Good morning, everyone. Good morning, dear students. I'm C. Ankit Sharma, your income tax faculty, for today's session in which we will be discussing the provisions of PGBP. This is our fourth session of PGBP. So before starting the class, please, you should have a paper, pen, a calculator with you because we will start with a MCQ. As I have told you in the last class that today we will have a MCQ test before starting the topic of PGBP, what we will be going to discuss today. Before that, again, a very good morning, Suprabhat, Sat Sri Akal, Namaskar, Subha Bakhair, Vanakkam, Kemcho, Kasakai, Bonjour, etc., etc., etc. So winters are here, of course, and I believe that you all are studying very, very hard for your future to becoming a chartered accountant. So good morning. Wishes has been from Parth, Ramadevi, Ajay, Kiran, Muhammad, Gaurav, Manawar, Pooja, Kadambri, Neha, Almas, Priyanka, Santhige, Shruti, Muhammad, Divya, Mamta, Srinivasan. Okay, Srinivasan Venkatraman. Yes, we are going to do the MCQs. Akaram, Prince, Gunjan, Sushil, Zafar, Sampurna, Anuradha, Swati. So I welcome you all for today's session. And before starting the MCQ, let's discuss the thought for the day. And after that, we will start our MCQ today. So this is our thought for the day. And it says success is the sum of small efforts repeated day in and day out. So generally, we do not get the success in a one day. It takes time. So success is the technically the accumulated result of whatever you do daily, in day in and day out. So when you will be a chartered accountant, that's not going to be happen in a single day because for that you are actually working every day. So exactly, success is the result of your small efforts, what you actually do every day, and that's matter. CE is all about hard work. If you want to be a chartered accountant, so you have to make a plan. You should follow that with a discipline, and that will be you need to do that on every day. So that accumulated effort will result in your success, and that will be your career, that is a chartered accountant. Fine. So let's MCQ test. So I guess you all are ready for the MCQ test. You should have your paper, pen, and a calculator for that. So the question number 1 is here for you. And it says, opening WDV of the block of asset was 15 lakh during the year. Asset acquired in this block was 10 lakh on 15th June 2023. So if in the question, date of put to use is not given, then the date of purchase will be assumed as put to use. Okay. So one new asset has been purchased on 15 June 23. One of the asset falling within the block was sold for 5,50,000 on 14th January 2024. So rate of depreciation is 10%. You have to calculate the depreciation available during the previous year for the block. So kindly solve it and send me your answers. Kindly send your answer with the question number, like question number 1, and then write the option. Okay. What is the correct answer of question number 1? Anybody? Let's see. Okay. Suman is saying A, Nagarju is saying A, Srinivasan is saying A, Mohammed is A. Yes, the correct answer is A, that is 1,95,000. Let me help you. How it came? Opening WDV given in question is 15 lakh. Okay. New purchase 10 lakh, and always I already suggested you that whenever you add any value of any asset, then you should write it down beside it. It is more than 180 days or less. So because it has been purchased on 15 June, so it is assumed that it has value that is more than the number of days has been used more than 180 days. Not assume actually, because the date is 15 June. So automatically from 15 June till 31st of March 2024. So that will be considered as used for more than 180 days. Now, out of this 25 lakh, money received 5.5 lakh. So balance is 19.5 lakh. So now let me give you a suggestion regarding this. Whenever you deduct the money receipt from the block, of course, you have to do in this format. You have to deduct after the total of opening plus asset purchase. But for the purpose of depreciation, you should do one thing. You should deduct money receipt from here also for your working notes. So now you can see that the value I have is 9.5 lakh out of the opening WDV and 10 lakh from the new asset purchased. So you know, DAP rate full will be applicable on this. And of course, this is going to be applicable with full rate of depreciation. So my DAP will be 1.95 lakh rupees. 1,95,000 rupees. Clear? So that will be my depreciation. We have to show over here, but that will help you. Because suppose if this is less than 180 days, then upon 19.5 lakh, how you will calculate depreciation? So you again have to go for working note. You have to find how much of value is more than 180 and how much of value is less than 180. So if you are following this part over here, so you need not to do another working note, you will be able to find what DEP rate should be charged in this scenario. So always do like this. One more suggestion, one more clarification is this. In the question, it does not tell us that which 5,50,000 asset has been sold. Is it sold out of the new asset purchased or out of the opening WDV? So always, if question is silent, always follow FIFO. That means this value should be deducted from first this opening WD. Then the remaining value will be deducted from this asset purchased value. But if the question says directly, suppose in the question it says, in this question, suppose question says that out of block of asset, 5,50,000 has been sold from new asset purchased. If it has been given specifically, in some question, it might be given specifically that this money received is in respect of specific asset that is purchased newly by the assessee. So in that case scenario, how we need to solve it? Opening is 15 plus purchase is of course 10, 25, money received 5.5, but from here we will deduct money received from this value. So opening will remain 15 and this will be 4.5 lakh. Now 10% on this and 10% on this. Answer will come same. But if the asset is less than 180 days, then answer will be different. Because now on 4.5 lakh, we have to calculate depreciation with half rate. And on full 15 lakh, depreciation should be with full rate. In the later MCQ, you will find it out. So always applicable FIFO method if the question is silent. Okay. Question number 2. Opening WDV of the block of asset was 25 lakh. During the year, asset was acquired under this block on 11th October 2023, amounting to rupees 15 lakh. Also, money payable in respect of asset falling within this block was 38 lakh. So, question has not specifically given which asset has been sold. So FIFO method will be applicable. So you have to calculate the depreciation. Kindly send me the answer as soon as you solved it. A lot of students given the correct answer. Very well done. Good morning, Jay Patel. Yes, additional depreciation will be calculated if there is a manufacturing unit or the question asked to calculate it. Okay. You need not to write FIFO anywhere. You need not to write note even. It's obvious that if question is silent, we have to use the FIFO base until otherwise is specifically given in the question. Okay. Okay, question number 2. The correct answer is option B, that is 10,000. Now in option number 2, I can show you what will be the difference if you apply FIFO or if you will not apply FIFO. Opening WDV, 25 lakh. Asset purchase, that is 15 lakh, and that is for less than 180 days. Okay. Now we have 40 lakh. Now the money received regarding the assets are 38 lakh. So we have left with value 2 lakh. And we do not know this 2 lakh belongs to full rate of depreciation or half. So we will use FIFO method in this case. Out of this 38 lakh, 25 lakh value will be deducted from the opening because we are using FIFO. So that value will be 0. The balance 13 lakh out of 38 lakh, 25 lakh has been deducted from the opening value and the 13 lakh left will be deducted from the new asset purchase. So remaining this 2 lakh belongs to this value. And this is because less than 180 lakh. So DAP rate will be 5%. That will be 10,000 rupees. So depreciation at the rate 5%, that is 10,000. Clear? Now suppose in this question, this is a question to understand. Suppose in this question, if it says that this 38 lakh rupees has been received from the new asset purchase 15 lakh. So you might be thinking how it's possible to receive 38 lakh rupees for 15 lakh asset. It does not matter. If the question says, then we should not use now FIFO method. Now, how the answer will change? Opening is 25. New purchase 15, which is less than 180. That is 40. Now money received says 38 lakh. And suppose it specifically says that this is for new asset. Then we have to deduct 15 lakh out of the new asset value, out of this 38 lakh. We cannot deduct more than this. So that will remain 0. And the balance value, that is 23 lakh now will be deducted from the opening. So now the balance 2 lakh will belong to opening WDV value, which has having the DAP rate of 10%. So in that case, depreciation will be 20,000. So if this case question is silence, so we are applying FIFO method. But if the question is specifically said that this is out of the new asset purchase, then we should use, as per this case, the depreciation value. So it's very important to see that the money received is for not mentioned specifically, or it has been mentioned specifically. Then first you have to deduct the value from that asset, and then the other asset value should be reduced. Okay. Why we are reducing the value of new asset from opening? Because the block of asset concept says once an asset comes into the block, its individual identity ceased. Clear? Question number 3. Adu Limited owns machinery at the rate 15%, the WDV of which as on 1/4/23 is 30 lakh. Due to fire, entire asset in the block were destroyed and the insurer paid 25 lakh. The eligible depreciation you have to calculate. Kindly send me the answer. Question number 3. Rama is asking question number 2, sir. Why we calculate depreciation 5%? That is 50% it's furniture. Because the DAP rate has been given 10%, the furniture DAP rate is 10%, so half will be 5%, Rama. Let me see. The money, sorry, it should be money receivable, not money payable. It should be money receivable, definitely. Clear? Question number 3. Okay, so question number 3, a lot of answer has been received by me, and it's very good that most of you are saying the right answer. That is option number D. There will be no depreciation. And why? Because in the depreciation concept, I have told you that there should be asset and value both. The question says the entire asset in the block were destroyed. That means opening that was 30 lakh. Money received for asset destroyed is 25 lakhs. So value is there. But there is no asset. Because the question says full block has been destroyed. So if there is no asset, then there can be no depreciation. So correct answer is option number D. So please always check in the question that value and the asset both must exist for the purpose of depreciation. Okay. There's a main ingredients to calculate depreciation. That there should be value and asset both. Okay. Next question number 4. Swan Private Limited acquired machinery for 5,75,000 on which GST is 75,000, which is eligible GST. Credit borrowed 3 lakh from a bank for purchase of the said machine. Interest on the bank loan up to the date of usage of machine was ascertained at 25,000. The machine was put to use from 15 September 23. Assume the DAP rate is 15%. Calculate the depreciation. So in this case, GST is eligible for credit. So that means the value will be 5 lakh rupees. In the case of 5 lakh rupees, the date of put to use interest is 25,000. So our value for the purpose of depreciation will be 5,25,000 rupees. It has been put to use on 15 September. That means more than 180 days. So we need to calculate depreciation at the rate of 15% on 5,25,000. The correct answer will be option number B. 78750. Okay. Next is Mr. X purchased a machinery invoice value 12 lakh. He has made payment of 10 lakh by account pay check 150 through RTGS and 50,000 in cash to the supplier of machine on 15 July. So we have discussed that if the payment is exceeding 10,000 in cash, then that payment will not be considered for the purpose of actual cost of the asset. So technically, 10 lakh plus 1 lakh 50,000. That means the value of the asset, the actual cost of the asset will be 11 lakh 50,000 rupees. Option C is the correct answer. A company incurred capital expenditure on scientific research. Land 5 lakh, building 10 lakh, equipment 7 lakh. The amount of expenditure eligible for deduction under section 35 would be. So for scientific research purpose, we have discussed that land value cannot be the part of deduction or depreciation anywhere in income tax. So in that scenario, only building and equipment's cost will consider, that will be 17 lakh. So question number 6, correct answer is 17 lakh. Okay. Where the assessee does not himself carry on scientific research, but it's go for outsourcing of scientific research. So how much deduction we can claim in respect of outsourcing of scientific research? Very simple, that is 100% deduction you can claim if you are under optional tax regime. Remember, if the question relates to the default tax regime, then the correct answer will be D. But in this case, we are assuming that it is for optional tax regime. In that case, the correct answer is C, that is 100%. I have uploaded notes also, chart presentation, I guess yesterday. So if any one of you have downloaded it, And I guess you must have going through the chart presentation. And I personally believe that if you are reading the chart very sincerely, and that will really help to understand the provision very easily. I have prepared chart for everything, almost of every provision, section 30, 31. Then for depreciation also there is provision, then additional depreciation 35D, then section 35, 35AD. So whatever section we have discussed already, if you are uh, reading with the help of chart, that will really really going to help you to make you understand the provision very easily and very rapidly also. So you should have download the notes and the chart, and please read the chart carefully. It will really going to help you. Okay. So question number 8, Mr. Rajan has incurred expenditure of 5 lakh by way of payment of sum to approved scientific research association, whose object is undertaking of scientific research. Again, it's an outsourcing question. So deduction will be available for the full value, that will be 5 lakh. The correct option will be C. Again, that will be only in the case when assessee has applied under optional tax regime. If it is under default tax regime, this deduction cannot be claimed. Question number 9. Now, in this question, we have to calculate the depreciation and additional depreciation. Kindly read the question carefully and calculate the answer and let me know. I am giving you almost 2 minutes to solve this question. So question number 9, answer you should find as soon as possible. Okay. So here is depreciation as well as additional depreciation value. You should give the answer. Almas is asking, what happened if fire was destroyed during the middle of the year? Does not matter. Even it happens in middle of the year or the end of the year. If there is no asset in the block, then there cannot be any depreciation. If GST is included in machinery, credit available, then 15% of 5,75,000 minus 75,000 comes to 75,000 answer. Am I correct? If GST credit is not available, then the value of GST plus the interest value that also be added. So technically it would have been 6 lakh rupees, I guess. In that case, the depreciation will be claimed on 6 lakh. Who was asking? Mr. Ramas. Okay. Priyanka is saying not available on site. So because I uploaded that yesterday, so you might get it after 3, 4, 5 hours today. Okay. Anybody has sent me the correct answer? Miss Rama Devi is saying question number 9, correct answer she sent, that is option D. Okay. I don't know it's correct or incorrect. Anyone else? Okay. Suman is saying B. Mohammed saying D. Akram Ansari is saying B. Okay. So only 2 options are selected by the students, either option B or D. So what is the correct answer? The correct answer is option B is the correct answer. How? Let me explain you. Opening, that is 15 lakh. New purchases, 10 lakh. And that is less than 180. Clear? That is 25 lakh. One asset has been sold for 5,50,000. But because the question is silent, so we will apply FIFO method. This has been reduced. So we have now value 9.5 lakh at the rate 15%. And 10 lakh is going to be taxable at the rate of 7.5%. So that is going to be my normal depreciation. That will come 2,17,500. And in only new asset, we can claim the additional depreciation. And because the asset has been used for less than 180 days, so additional DAP rate was 20%, but because it's less than, then we can claim half of it. That is 10% of 10 lakh. That will come 1 lakh rupees. So that total depreciation, including additional, will be 3,17,500. The balance 1 lakh of additional depreciation can be claimed in next assessment year, that assessment year 25-26. I hope it's clear. Next is which of the following is not allowable as deduction? We all know that. Option A, B, C, D. For 35 AD, we cannot claim goodwill, we cannot claim land, and we cannot claim investment in shares. That means financial instrument. So the correct answer is E, which says A, B, and C. So that was the MCQ for today. Now moving on to our notes. The provision what we were discussing. In the last class, we were discussed the provision regarding TDS, that if a person pay any sum on which TDS needs to be deducted by the payer, and if it has been paid to a non-resident, then what condition should be fulfilled to claim that deduction? If it has been paid to a resident who is in India, then the condition, and then the resident outside India. And if the payee, in case of resident assessee, if the payee himself deposit the tax and file the return of income within time, then it will assume that payer has deducted and deposited the TDS, and payer can also claim the deduction in that scenario. So I have explained you with the provision with the help of a diagram, with the help of the chart. And now here are the theoretical provision. You can go through it, you can read it, and let me tell you, the chart will really going to help you in this case, because the language of the act is not that simple. It's quite complicated, you can say, or you can say it's quite confusing. And you can say the provision is like as per chart, if he is payable to outside India to a non-resident. So in this case, you will see there will be separate provision in case of salary and for other. So if it is a salary payment, then the TDS should be deducted and deposited up to due date of TDS. Then only deduction of that salary can be claimed. Otherwise, it's going to be lapsed. If it is other payment, then the payment should be deducted and deposited of TDS up to due date of ROI, or deduction will be claimed in the year in which that TDS is going to be deducted and deposited. You can read this and you will find that yes, the summary was exactly the same what we discussed. The point number section 40A 1A talks about the resident. This is very important, that in case of a resident assessee who is in India, if you are paying salary or any other sum, the concept is same in both situations. That if the TDS has been deducted and deposited up to due date of ROI, okay, then deduction can be claimed in the same previous year. And if otherwise, then 70% deduction can be claimed even in the same year, and balance 30% will be in the year in which the TDS has been deducted and deposited. The concept what we discussed regarding that, if payee furnish the return of income and pay the tax on that case, it will be assumed that payer has deducted and deposited the tax. So this is the provision which talks about this. In case assessee fails to deduct, assessee means payer, because the primary liability is upon the payer to deduct the TDS and deposit it. But if he fails to deduct the whole or any part of tax on such amount, but is not deemed an assessee in default under the first proviso of section 2011 by reason that such pay, so he will not be treated as assessee in default even if he does not deposit or deduct it, but he will not be treated in default if the payee, the receiver, furnishes return of income, has taken into account such sum for computing income, and has paid tax on the income which is paid by payer. So it would be deemed, in that case, it would be deemed that the assessee, that means the payer, has deducted and paid the tax on such sum. So payer will be eligible to take the deduction if the payee complies with condition number 1, 2, and 3. Tax on royalty paid to Mr. A. A resident has been deducted during the previous year 23-24. The same has to be paid by 31st July and 31st October. That is due date of filing of return of income. In certain cases, it's 31st of July, and in certain case, it's 31st of October. For whom it's July or October, that will be covered in your another chapter, which is regarding the filing of return, etc. Okay, as the case may be. Otherwise, 30% of royalty paid would be disallowed in computing the income for assessment year 24-25. If in respect of such royalty tax deducted during the previous year 23-24 has been paid after 31st July or 31st October 24, 30% of such royalty would be allowed as deduction in the year of payment. The same thing what we have already discussed. Any sum which is chargeable under the head salary, if it is payable outside India to a non-resident and if tax has not been paid thereon, not deducted, then you cannot claim the deduction regarding it. Okay. There is a chapter number 7 which talks about the TDS concept, the advanced tax concept, etc. So illustration 11 we are not able to solve because it is correlated with the chapter number 7 provision. So illustration 11 we will skip. When it will come, we are discussing illustration number 10. Delta Limited credited the following amounts to the account of resident payee. So the payee resident. So if the payee is resident, then that 70% deduction will be automatically allowed even if the tax has not been deducted, etc. In the month of March 24, without deduction of tax at source, what would be the consequences of non-deduction of tax at source by Delta Limited on these amounts during the financial year 23-24? Assuming that the resident payee in all the cases mentioned below have not paid the tax, and suppose the payee did not deposit. So we need to answer on the basis of that payer, not deducted, not deposited. Let's see. It says salary to its employee, Mr. X, credited and paid in March 2024, 12 lakh rupees on which TDS has not been deducted and deposited. Director's remuneration, which is credited in March 24, paid in April 28,000. So in both amount 12 lakh and 28,000, no TDS has been deducted, but the payee is resident in India. So because he's payee resident and in India, so 70% deduction we can claim straightforward. You can see the answer. 70% will be claimed, only 30% will be disallowed out of 12,28,000. Clear? The balance of this 30% can be claimed in the next year, in which it is going to be paid. This is illustration number 11 that we cannot discuss over here because it is related directly to chapter number 7. So we are skipping illustration number 11. Okay. Section 40A. In earlier also, I have told you that in case of bonus and commission under section 36, we have discussed that if there is any amount which needs to be paid on the basis of profit or income of the assessee, whether it's bonus, commission, salary, remuneration, etc. If anything which is going to imposed upon the income or net profit of the assessee, that cannot be allowed as a deduction. So that's why any income tax cannot be allowed as a deduction. So section 40A2 specifically says any sum paid on account of any rate or tax levied on the profit on the basis of or in the proportion to the profit and gain. It is clarified that that the term tax shall include and shall be deemed to have always include any surcharge, cess, etc. So in short, we can say that income tax, the surcharge of income tax, the education cess, etc., any kind of dividend, etc., which is based upon the profit of a business, cannot be claimed as a deduction. Okay. Point number 4, section 40A(5). Now, this is connected with the salary chapter. This is the beauty of income tax. They all are interconnected. We just need to understand from where it has been connected. Under salary head, we have discussed the provision that if employer provide tax-free salary to its employee, tax-free salary, that means the tax on the salary also going to be bear by the employer. So that is going to be the perquisite in the hands of employee. Clear? Now it says, in case of an employee driving income in the nature of perquisite. So if any employer going to pay tax on the perquisite of the employee. So if is going to pay tax on the employee salary, bonus, commission, and monetary payment, that tax is going to be the part of employee salary again. But if the tax has been paid by the employer on the perquisite, that means non-monetary item to the employee, non-monetary item to the employee. In that scenario, that tax would not form part of the perquisite or the income of the employee. Clear? Suppose employer paid monetary payment ₹10 lakh, on which tax is suppose 1 lakh. This is also paid by employer. Clear? Employer also paid perquisite, or we can say non-monetary payments, ₹4 lakh to employee, on which 30,000 tax paid by employer. So now under the head salary, if we talk about in the hands of employee, so now salary will be ₹10 lakh plus the tax paid by employer 1 lakh plus the non-monetary item, that is 4 lakh. So tax paid on perquisite is exempted under the head salary as income. This is exempt. So that will be salary for the purpose of employee under salary head. In the same way, for PGBP, now we are talking about the employer case. We are discussing now the employer case. So because this 30,000 cannot be treated as income in the hands of employee. So when we talk about the deduction for the purpose of salary in the hands of employer, that will also remain only 15 lakh. Same. So if anything cannot be treated as income in the hands of someone, then generally it cannot be claimed as expenses in the hands of the payer. So because this 30,000 will not be treated as perquisite because it is exempted under salary head in the hands of employee. So in the same case, this 30,000 cannot be allowed as a deduction in the hands of the employer. So that what we were going to discuss. So it says, in case of an employee driving income in the nature of perquisite, other than monetary payments, the amount of tax on such income paid by his employer is exempt from tax in the hands of the employee. So exactly because that is not an income in the hands of employee, correspondingly such payment is not allowed as deduction for the purpose of employer. Clear? Interest and remuneration to partners. Now we are discussing the topic for partnership firm. In case of a normal business like individual, HUF, etc., and in case of partnership firm or LLP, there is only two differences. There is only two extra deduction which can be claimed by the partnership firm but cannot be claimed by a proprietorship, etc. Like in case of proprietorship, salary to proprietor is disallowed expenditure because it's a drawing. It cannot be treated as an expenditure. Any interest on loan to the proprietor again cannot be claimed as a deduction. But in case of partnership firm, interest to partner and salary to partner is allowed as deduction up to a certain level as per section 40B. So treatment is exactly the same in case of proprietorship firm and partnership, except this two expenditure, which can be claimed by the partners of the firm but cannot be claimed by the proprietor. There's only just two difference. And the treatment of partnership firm and LLP both are same. There is no difference. So what is this two deduction? How we need to claim it? With the help of an example also, we are going to discuss in section 40B. So I have make a summary provision for you. So that is going to be help all of you because you'll be able to understand the provision very easily with the help of this summary concept, assessment of partnership firm and LLP. Before starting this concept, let me see if there is any query. Let's solve this. Devraj, good morning. Okay, badi jaldi good morning hogi beta. Very good. Miss Riya Goswami is saying, second last question, please explain one more time. Riya, you can scroll back the video. We are on YouTube. You can see multiple times whenever you want. So you'll be able to understand. Yes, I promise. If even watching that video again, you are not able to get the answer, you can ask me in the next session. I will explain it to you. Okay. Gondhi Nagal Nagabala Murugan. Okay, Mr. Murugan, what are you saying? In question 6, payment more than 10,000 case, entire 50,000 was not taken into the consideration, but not 40,000. Yes, if the amount exceeding 10,000, then the full value will be excluded for the purpose of actual cost, not the exceeding. The full value cannot be claimed as a part of actual cost. So if it is 11,000, we will not consider the full 11,000. Okay. Next is. Now we are moving on to assessment of partnership firm. So what is the difference? In case of partnership firm, we have to calculate a amount which is called book profit. So first of all, we should know what or how to calculate book profit. The format has been given over here. Let me explain you with the help of a small example, the concept. So it will really help you. So in case of partnership firm, please pay your attention, be focused because partnership firm topic is very important. Generally, it comes in the examination with a 4 or 5 marks question, or it can be the main question also of PGBP of a partnership firm, which will be like 10 marks or 8 marks. So it's very, very important for the purpose of your examination. So kindly pay your attention, focused. In case of partnership firm, there will be, of course, a profit and trading and profit and loss account will be given in the question as in the normal case. I am explaining you what is the meaning of book profit, how to calculate it. And let me tell you, if you are able to calculate the correct book profit for the case of partnership firm, then your 90% question is automatically solved. So there must be sale, closing stock, etc. over here. Suppose the value is 50 lakh, just suppose. Other expenditure like normal proprietorship business, office expenses, salary, so and so on. Okay? So assume the other expenses is like 40 lakh. The new thing in case of partnership, that will be salary to partner. Suppose there is two partner A and B. We are paying salary 3 lakh and 3 lakh to both. So that will be 6 lakh. And that is for accounting provision we are making. And there is interest to partner A or B. To A we are paying 15% interest and to B we are paying 20% interest. Suppose this is 50,000 and this is 1 lakh. So that is 1.5 lakh. So technically we are having a net profit that is 3.5. Suppose in this expenditure, there are certain disallowed expenditure. We have to disallow them in the normal course of question. But for example, suppose disallowed expenditure is 4 lakh is given. And disallowed income, suppose 1 lakh. So now when we will solve this question, first of all, we have to solve it as normal provision. We have to take the net profit. For the calculation of book profit, we will find out the net profit as per income tax provision. And for the purpose of income tax provision, we will take the net profit that is 3.5 lakh. The disallowed incomes will be deducted. As I've told you in the first session of PGAP, we discussed that what we need to do, the income which is disallowed, the income which are disallowed, which should not be the part of our profit, should be deducted, and the expenses which are disallowed should be added back. So technically, after that, we are over here as per the normal provision. But for the purpose of partnership firm, whatever remuneration to partner, remuneration, salary, fees, bonus, commission, by whatever name called, is given in the question. This is as per accounting provision. So always add back 100% remuneration, salary, etc. paid to partner. So that is going to be added 6 lakh. Fixed rule. Fixed. Always add full remuneration paid to partners, whatever has been given in the trading in P&L account as per accounting provision. Clear? And after that, interest to partners exceeding 12% is going to be disallowed. This is the rule under section 40B. Under income tax, you can only claim up to 12% of interest paid to partners. So if any interest which is exceeding 12% in both cases need to be disallowed. So for in the case of A and B, we have to disallow. In case of A received 50,000, which is equivalent to 15%. So exceeding 12%, it is 3% exceeding. So that is going to be disallowed. That means 10,000 is going to be disallowed in case of A. In case of B, he receiving 1 lakh rupees for 20%. How much exceeding 12%? 8% is exceeding. So in that scenario, 40,000 is going to be added. So this is my book profit. So what is exactly the book profit? The book profit means, the book profit means the profit as per income tax plus the additional thing, add back the full remuneration and add back that interest which is exceeding 12%. Now this is my book profit. That will be 3.5 minus 1 plus 4 plus 6 plus 0.5. So that will be 13 lakh rupees. Clear? So I have made the format also for the purpose of book profit. I have just explained you with the help of an example that how we need to calculate the book profit. So again, listen carefully. What is the book profit? The profit after adding back all the remuneration paid to partners and any interest which is exceeding the 12% paid to partners and all other allowed disallowed concept as per the income tax provision what we are discussing. So after that what we will have, that will be our book profit. Clear? So here is the format also for your help. It says book profit will be calculated as follows. Calculate net profit as per the provision of Income Tax Act. First of all, calculate the net profit as per the provision of Income Tax Act, disallowed expenses, disallowed expenditure and income, etc. Then add back actual remuneration paid to partners. Fix, always add back this remuneration into the add back. So in this case, add after that any interest to partners on loan or capital in excess of 12%. That will be my book profit. So for the purpose of the definition of book profit, I can say that profit which is as per income tax, but after adding all the salary paid to the partner as per accounting and the interest which is exceeding 12%, that will be called book profit. What will be our next step after calculating the book profit? After calculating the book profit, now we have to find the remuneration to partners as per income tax provision. So as per accounting provision, the salary or interest will be given in question. But for the purpose of income tax, interest concept is very simple. It says in case of interest, 12% will be allowed and any excess will be disallowed. So that is very simple. But for the purpose of remuneration, we need to find the book profit. So the book profit what we are searching is not for interest concept. It is for salary concept to partners. So as per accounting, salary has been given, but for the purpose of income tax calculation, how much salary should be allowed or what should be the maximum salary a partnership firm or LLP can provide to the partners, that will be find out only after the calculation of book profit. So the concept says after finding the book profit, this is the salary which will be the maximum salary as per income tax. It says on the first 3 lakh rupees of book profit. Why we are finding the book profit? Because for the purpose of salary calculation, we have to find the book profit because salary under income tax to partners is based upon the book profit concept. So due to the reason of this table, we need to find the book profit first. And it says on the first 3 lakh of the book profit or in case of loss, how much maximum salary will be allowed? That is 1,50,000 or at the rate of 90% of such book profit, whichever is more. Please remember, whichever is more. So suppose if your book profit is 4 lakh rupees, okay, if your book profit is 4 lakh, then out of that 4 lakh, the first 3 lakh book profit, you can claim a salary of 1,50,000. It's a fixed limit, or 90% of the such book profit. What is such book profit? 3 lakh, not 4 lakh. So if your book profit is 4 lakh, then for starting 3 lakh rupees, the maximum salary under income tax is 1,50,000 or 90% of 3 lakh, which will be 2,70,000. Do not worry. I will explain with the help of an example. We are just discussing the provision right now. So 1,50,000 or 90% of such book profit. That means 2,70,000, whichever is more. And the balance book profit, that will be 60%. That's it. So this will come the total maximum salary allowable under income tax. So in this case, if you'll see, the book profit is 13 lakh. And if I need to calculate the maximum salary as per income tax, then out of this 13 lakh, first 3 lakh, how much salary can be allowed, it is 1,50,000 or 90% of such profit. That means 3 lakh. That will 2,70,000. Do not ask, sir, in this case, it will always 270 will be higher. Then why we are doing this? I will explain you why we are doing this. Just have patience. So higher will be 2,70,000. Now balance left is 10 lakh book profit. Out of the 13 lakh, we have used first 3 lakh over here. Balance is 10 lakh. So 60% of it, that means 6 lakh. So maximum salary as per income tax will be 8,70,000. This 270 and this 6 lakh. So now what we will do? Income tax says you can pay maximum salary to your partner. In this case is 8,70,000. And account says we have paid 6 lakh. So now how we will calculate the net profit? So for calculation of book net profit, the book profit was 13 lakh. Now allowable salary we have to deduct, not the income tax salary, the allowable salary. As per accounts, it's 6 lakh. As per income tax, it's 8.70. And income tax says the allowable salary will be lower. So that 6 lakh will be deducted. And your answer, that means net profit for the purpose of income tax, the correct answer is 7 lakh rupees. So there are certain steps you have to follow to calculate this concept. In case of partnership firm, the first concept is to find out the book profit. I have made the format for it. You can check that. Once you get the book profit, then the second step to find the maximum salary allowable. As per income tax on the basis of book profit, which says up to 3 lakh, it will be 1.5 lakh or 90%, whichever is higher. Balance 60%. So that will be maximum salary as per income tax. Now the step number 3 is the net profit. How to find the net profit for the partnership firm? Let's say whatever will be your book profit as per step number 1. Now deduct salary as per accounts, whatever given in question, or maximum salary as per income tax, as we find out over here. And whichever is lower need to be deducted. And we will have our answer, that will be our net profit as per income tax. So you have to follow these basic 3 steps to find out the correct answer. Now there are some example. If the question is in your mind that 2,70,000 will always be there. No, it's not. Suppose the book profit is 2 lakh rupees only. The book profit comes 2 lakh. Then the remuneration format or table say up to 3 lakh of book profit. But here is only 2 lakh rupees book profit. So we will take only 2 lakh rupees book profit. How much maximum salary will be allowed? 1,50,000 is fixed, or 90% of this. That will be now 1,80,000. So now in this case, higher is not 270, the higher can be 180. Suppose book profit is only 1 lakh rupees. Then again, 1,50,000, or now 90% of this, that is 90,000. So in this case, 150 will be maximum salary as per income tax. You have to compare this with the accounting salary. Okay. Suppose book profit is technically loss, 50,000. The table say in case of book profit up to 3 lakh or in case of loss. So suppose we have a negative book profit. That means technically we have loss. So how much remuneration will be allowed? Always 150. Because 90% of this will come in negative 45,000. Negative cannot be higher ever. So even in case of loss, we have always maximum allowable salary will be 1,50,000. I can make a universal provision that always minimum maximum salary For a partnership firm case, as per income tax will be 1,50,000. Because even in case of loss, at least this will be higher. So the concept is higher. So always minimum 1,50,000 will be the maximum salary as per income tax in all situations. Understood? I hope. So that is how to calculate the book profit. That is how to find out the remuneration. Now you can see after book profit, I have made the format this also, how to find the income tax profit. Minimum of the following will be allowed as salary. Actual salary as per debited to P&L account, that means as per accounting. Maximum salary as per income tax 40B. Whichever is lower need to be deducted, and that you have your answer, that is net profit as per income tax, what we were searching for. Now the question says, in the hands of the partner, the treatment in the hands of the partner. It says the allowable portion of salary, remuneration and interest in PGBP will be taxable in the hands of the partners under the head of PGBP of partners individually. So whatever is allowable salary, allowable interest in the hands of partnership firm will become the income of the partners in their hand under PGBP head. The profit share will always be exempted in the hands of partner. Point number 2 says profit received from the firm by partners will be exempted in the hands of partners. So only interest portion and salary from partnership firm is going to be taxable in the hands of partner, and that is also the allowable portion. Okay. The term book profit. Now moving on to illustration. Always remember one thing, we need book profit. And the book profit means the profit after applying income tax allowed disallowed concept plus adding back full remuneration to partners and interest exceeding 12%. That value we need to find for the purpose of calculation. Illustration 12 says a firm has paid 7,50,000 as remuneration to its partner in accordance with its partnership deed, and it has a book profit of 10 lakh. So what is the remuneration allowable? So for the purpose of remuneration, you can see 10 lakh has been given, the book profit. So on the basis of 10 lakh up to 3 lakh, that will be 1.5 or 2.7, whichever is higher. So that is 2,70,000. Balance left 7 lakh. So for the purpose of 7 lakh, 60%, 4,20,000. So allowable remuneration, maximum remuneration as per income tax 690, as per accounting is 750. Allowable will be lower. So 690 will be the deduction which can be claimed by the assessee. And if we deduct the 690 from the 10 lakh, we will have our net profit as per income tax answer. Clear? Illustration 13 is important. Now read it carefully. I guess this kind of question has been asked in the examination also. What a student mistake generally in the question, they do not read it properly. What I have told you, what is the meaning of book profit? What is the meaning of book profit? It says net profit as per income tax plus salary paid as per accounts to partner plus interest exceeding 12%. Clear? We need this. Okay. Now read the question very carefully. Rao and Jain, a partnership firm consisting of two partners, reports a net profit of 7 lakh. Read this, before deduction of the following. That means these items have not been deducted in this 7 lakh. It has not been deducted. Clear? What is not deducted? Salary of 20,000 each per month payable to two working partners of the firm. So 20,000 into 12 into 2. That means 4,80,000 was accounting salary, which has not deducted in this profit. That means it has not deducted yet. Okay. Depreciation 1,50,000 not deducted yet. And interest on capital at 15% per annum The amount of capital eligible for interest is 5 lakh rupees. So 15% interest. So these three have not been deducted. Suppose if question says it has been deducted, already deducted as per accounting, then we have to add back the salary. Then I need to add back the interest, 3%. And depreciation will be allowed because depreciation should not be add back. It is allowable expenditure. But the problem says, the question says this 7 lakh before deducting the following item, before deducting. So in a simple method, I am going to tell you a simple method, always follow that. So that will not be a problem for you. If it is not deducted, first deduct all these things. The net profit has been given 7 lakh. Let's deduct salary as per accounting. That will be 4,80,000. That should be deducted minus. We are making as per accounting. Then interest, 15% deduct full interest. You will disallow later. Fine. That will be 75,000. And the depreciation, that is 1,50,000. Deduct all these. First of all, deduct all these. 7 lakh plus 4,80,000 plus, sorry, we have to deduct it. 7 minus 480 minus 75,000 minus 150. So that will be a loss. It is coming 5,000. So that is technically net profit as per accounting provision. Or as per, sorry, income tax, because we have used the depreciation. But in this provision, the salary and interest has been deducted. So now we need to add back to find out the book profit. So that is net profit as per income tax. But now we have to add back the allowable salary to it. That is 4,80,000. You can also understand that if we do not deduct this, because we are deducting it, and again we need to add back it. So what is the benefit? The benefit is just you will not get confused. Because if you do not read this word properly, you might going to solve this question wrongly. So in the shortcut, we also solve like this, that 7 lakh is the net profit. Deduct the depreciation and deduct and add back the 3% of interest. That will come the same. But I am following the format, so it will be really easy to you to always follow the same concept again and again. So salary is going to be add back and interest is going to be add back 3%. 75,000 for 15. That will be 15,000. So now this will be my book profit. Once you find the book profit correctly, the question will be automatically very, very easy for you. That is 4,90,000. Now with the help of book profit, you can find out the allowable remuneration. 4,90,000. So in the study material, they use the shortcut, or you can say they use the more logical way. The logical way is because what we need to find in the book profit, that full salary allowed under the accounts need to be added back and the interest portion exceeding 3%. So because it says that's a net profit before depreciation, salary and interest. So why we need to deduct the salary first and need to add back? Why? So they just did the shortcut method used by them, and they deduct the allowable depreciation and whatever the interest allowable 12%, that is deducted by the under this shortcut method. So they will get the 4,90,000. But what we were discussing, how we solved it, we solved it with the help of the normal method. First of all, we find out after deducting the full value of depreciation, the salary to partner and the full interest. And then we add back the salary to partner full value and the interest, that is 3%. So that is the same format you have to follow. That will really help you. But if you want to follow the simple format, the shortcut method, you can follow this method also. The answer will be same in the both case. The logic is just this. You just need to remember one thing, that I want book profit. And you should remember the definition of book profit. I need net profit as per income tax plus need to add back full salary as per accounts plus need to add back 12% exceeding interest value. So this is my book profit value. You can drive it like this also in this example, or you can drive it the way I told you in the example. Whatever way suits you, you can follow that. Both are correct. So that was illustration number 12. Now next section, expenses disallowed under section 40A under specific circumstances. If you paid any payment to specified person, that is your relative, etc., and if the payment is exceeding the fair market value, for example, you've appointed an employee who is your relative and you are paying salary to that relative is 50,000 rupees per month, 50,000 rupees per month. But that kind of qualified employee you can also get from the market for rupees only 40,000 rupees per month. So technically you are paying to your relative extra amount. So if the assessing officer thinks that payment to a specified person exceeding the fair market value, the difference is going to be disallowed. Very simple provision. We can read it one by one. Payment to relatives and associate, provide that where the assessee incur any expenditure in respect of which the payment has been made to a specified person, excessive or unreasonable, the difference is going to be disallowed. Fine. Meaning of relative, etc. You should read it. Second is very important. We have already read this kind of provision in case of actual cost of capital asset or actual cost of asset, which says if excess of 10,000 is paid to the same person same day, otherwise than the prescribed method, the full value will not be considered for the purpose of actual cost. And the same concept is for revenue expenditure also. If you are business paying any payment to any person same day exceeding 10,000, then a full value is going to be disallowed. So condition should be one day to one person in aggregate total. If it is exceeding more than 10,000, other than the specified mode, that is going to be disallowed. Full value. Like for example, you have paid 5,000 rupees 5 times to the same person same day in cash. So that is 25,000. So full 25,000 is going to be disallowed expenditure. According to section where assessee incur any expenditure in respect of which payment or aggregate of payment made to a person in a day, otherwise than by an account paid check or a draft or NEFT or UPI or IMPS or RTGS, etc., exceeding 10,000, such expenditure shall not be allowed as deduction. Such full expenditure will be disallowed. If in respect of an expenditure of 32,000 incurred by X Limited, 4 cash payments of 8,000 are made on a particular day to one Mr. Y, one in the morning, one at 12 noon, one at 3 p.m. and one at 6, then full value exceeding 10,000 in aggregate. So full is going to be disallowed. Payment in excess of 10,000, we are describing the both concept, actual asset cost value and revenue expenditure. The provisions are same. If it is capital, that will not be considered as your cost. If it is revenue, that expense will be disallowed. This limit of 10,000 will be 35,000 in case of payment to transport operator or travel agent, etc. So government has increased this limit from 10,000 to 35,000, where the payment is made to a transport operator. In all other case, the limit will be 10,000 rupees. There are certain cases on which these provisions are not applicable. If it's a loan transaction, if you are going to pay a loan in cash, in that case, this section will not apply because the loan is a liability or it's a part of your balance sheet. The payment has been made as a loan, etc., will not form part of your profit and loss account. So it is not an expenditure. It is not an expenditure. So that's why, because it's not an expenditure, not a capital expenditure, not a revenue expenditure. So this concept is not applicable in case of loan transaction. Payment made by commission agents. This requirement does not apply to payment made by commission agents for goods received by them for sale or commission or consignment. For example, I am a company, suppose ABC Limited, and I have my commission agent which is in Delhi. Clear? I have transferred some amount to my commission agent, suppose 1 lakh rupees cash, to pay to the supplier, my supplier. So I am the company, Mr. Ram is the agent, and Mr. D is the supplier. So I have transferred some amount to the commission agent. He paid that amount, 1 lakh rupees cash, to the Mr. D who is the supplier. So in that case, this disallowance will not applicable on the commission agent, because that 1 lakh does not belong to his expenditure. That will be applicable upon XYZ Limited, but not as a commission agent. So if you are agent of someone and you are transferring some amount on the basis of the transaction of your principal, then this disallowance will not applicable in your case. But yes, if you are transferring the amount on your own behalf as a main person, as a businessman, as an assessee, then this disallowance will be applicable. Clear? Like a property agent, the property agent will transfer amount taking from Mr. A to Mr. B, from the buyer to the seller. So this cash payment, disallowance, etc., will not be applicable upon him, because that is not an expenditure. So as per loan transaction does not applicable, because that is not an expenditure. Again, in the same case, the payment made by the commission agent on behalf of principal is not the commission agent expense. So in that case, that is not applicable on commission agent. And you can see where commission agent purchase goods on his own account, but not as a commission basis, this requirement will apply. So for disallowance under this section exceeding 10,000, first of all, that payment should cover under the definition of expenditure. So if it is not my expenditure, then this provision automatically cannot apply. And we have some exception also. So these were the not applicable cases. Now we are moving on to the some exception. There are certain exception in which there can be expenditure exceeding 10,000 made in cash also, but still it will be allowed, it won't be disallowed. That is exception. You can see the difference. These are cases which do not consider as expenditure. So these are not applicable cases, loan and payment made by commission agent. So if the question says what are the cases on which this is not applicable, then the question is asking about these points 1 and 2. But if the question says kindly elaborate or explain the exception in which you can pay more than 10,000 cash same day, same person. So then we are talking about this provision, and this is rule number 6DD. 6DD talks about the exception of this section. And you will see it's very simple exception. Why government made this restriction? Why government says that you cannot pay more than 10,000 to the same person same day? Why in cash? Because government wants to know that if any expenditure exceeding 10,000 in cash, etc., then we need to know, is it genuine or not? Because cash expenditure cannot be trailed easily, because there is no specific person. If I'll say I am paying salary to a person 50,000 per month in cash, so even there is a real employee or fake employee, so we are not able to find out easily. So government will have problem to find it out, that either the payment was made to really, or it is just a fake payment to lower your profit of the business. So generally cash transactions are very risky, because government sees all the Transaction which are fake will be undertaking, or any transaction which is not real can be shown by the business in cash mode. So we have restricted the amount 10,000 only. So those transactions in which even it is in cash and government can identify the person who is paying it or who is receiving it, that is technically the exception. So you can see in the case of exception, generally those cases are covered in which government thinks that in these cases we can identify the payer as well as the receiver easily. So in that case, you can pay payment in cash. We can identify that is a genuine transaction or it's a fake transaction. So when the payment is made to a bank, suppose if Mr. A make payment to the bank, so bank knows who is Mr. A. If I have an account in the bank and I am going to deposit 1 lakh rupees cash in the bank, so that will come into my account. So income tax can identify whose payment it is because it is comes into my bank account. And how it is possible? Because bank can easily tell the department that in this account we have received so much of cash. So if the payment is made to the bank or society and LIC, then you can make the payment in cash. If you say I have paid up insurance premium of 40,000 rupees in cash to LIC. So we exactly can identify that it is a real payment or not, because we can identify this payment from the life insurance corporation. Okay. Where the payment is made to the government. So if there is any fees, stamp duty, any kind of legal payment which you need to pay to any government department, so you can pay it in cash because government can identify that yes, it is a genuine payment or not. So you can see the logic behind it. Whenever it is possible to the income tax department to identify the person who is paying it, this restriction has been removed. When the payment is made by bank, if the bank is making payment to someone, then again this can be done. Where the payment is made by way of adjustment against the amount of any liability incurred by the payee for any goods supplied or service rendered by SSC to such payee. So if there is any set-off of liability between two persons, in that case, this concept is not applicable. Technically, D point should fall in the not applicable cases, not under this exception, because in this case, there is no cash flow. How? Suppose Mr. A sells 1 lakh rupees goods to Mr. B. Mr. A sells 1 lakh rupees goods to Mr. B. So now B is the debtor for Mr. A, and Mr. B provides some services worth rupees 70,000 to Mr. A. So now A is also debtor of 70,000 to Mr. A. So if they adjust this 70,000 by book entries, only 30,000 is going to be paid. So that 70,000 is out of the concept of disallowance under rule number 6DD. Obvious, because there is no real cash flow for 70,000 rupees adjustment entry. So on that scenario, this cannot be applicable on that 70,000 adjustment. So technically, it's more like the not exception, it's more like non-applicability case. But we have to write in rule number 6DD if the question asked. Point number E, when the payment is made for the purchase of agricultural produce from the cultivator, etc., you can read, of course. When payment is made for the purchase of product from without the aid of power industries, when the payment is made to a person in the village or town in which there is no bank, then you can pay it cash. When the payment is made by employer to employee on the death, then up to 50,000 can be paid in cash. Where the payment is made by employer to employee outside his normal place of business, and if he is more than 15 days out of that his normal place of business, and in that place if he is not serving any bank account, in that scenario you can pay that in cash. Where the payment is made by agent, of course, and in the case of money changer, authorized dealer, this is exception. In point number A to K, you can pay the amount, whatever amount you want, in cash. Disallowance of provision for gratuity, all the provisions and all the reserves are disallowed under income tax. Provision reserves might be allowed under accounting provisions, but under income tax, there is no provision either for bad debts or for revaluation reserve, or any kind of provision or reserves are disallowed except the gratuity provision. Only gratuity provisions will be allowed if it is payable during the year. However, no disallowance would be made as per section 47 in the case gratuity that has become payable during the previous year. What exactly it means? Suppose XYZ Limited, they are going to retire 5 employees in previous year. And to each employee, they are going to pay 3 lakh rupees as gratuity. So the retirement is in previous year 23-24. So they have made a provision in their profit and loss account, that is provision for gratuity. That is 15 lakh rupees. 5 employees, 3 lakh rupees each. Suppose after this provision, there is a net profit of 6 lakh left. So this provision is allowed, but if these employees are going to retire in the previous year, by the end of the year, we suppose that they are going to retire. So we made the provision, but by the end of the year, the retirement cancelled. Out of these 5, only 3 retired. 2 retirement cancelled. So technically, how much gratuity is payable? Gratuity is only payable for 3 retired employee. For these 2 non-retiring employee in the previous year, the provision we made would not justify. So only 3 employees provision can be justified or can be allowed. These 2 employees gratuity provision will be disallowed. So gratuity provision regarding these 2, 3 lakh rupees each, 6 lakh is going to be added back. So gratuity provision is only allowed if it is becoming payable during the previous year. That means if the retirement takes place, then in that case, this provision can be allowed. Okay. Expenditure not allowable. The summary over here, you can read the summary also. We have include all the provision. Contribution by employee to fund, etc. If employer contribute anything to the fund set up by the employer under the genuine case, then it can claim as a deduction for the benefit of employee. But if that is not genuine, then you cannot claim the deduction. Section 41, that is profits chargeable to tax. Remission or cessation of trading liability. Let me take the queries before that, then we will move on to this topic. Mr. Akram Ansari is asking, tax on non-monetary would always exempt. Listen carefully. Tax on non-monetary would always exempt if it is bear by the employer. That we have discussed in salary topic also, Mr. Akram. Okay. Net profit in that partnership case is 2.5 lakh. If it is 2.5 lakh, then kindly solve that question with the help of 2.5 lakh. Might be, I make the mistake. Next is, this is interest on capital which is allowed. Interest on loan by partner will be allowed at full rate as the rate of loan. No, this is for both. Who is asking? Mr. Prince. The 12% rate is for both, whether it's interest on capital or interest on loan. It has been written in the format also. You can kindly check that out. Okay. It is for both kind of interest, whether it's on loan or whether it's on capital. The salary to partners disallowed and 100% it is added back. Sir, am I correct? Yes. Whatever salary has been paid as per the accounting purpose, that is going to be 100% disallowed initially. Then we need to find out the book profit, and then we need to find the maximum salary as per income tax, and then the lower of both of them is going to be deducted. But for the purpose of calculation of book profit, 100% should be disallowed initially. Sir, I am thinking I will clear this examination. Sir, what is your view? Please tell me. I am preparing for 15 hours a day. This is not the question, Santosh. Please, it's a request. Kindly do not ask this kind of question. Please. Okay. Ruturaj is asking, if book profit is 1 lakh, then 90% will be 90,000. So in this case, 150K of salary will be used. So exactly if the book profit is 1 lakh, then 90,000 or 1.5 lakh, whichever is higher is going to be maximum salary as per income tax. Okay. But this is not allowable salary because this 1,50,000 or salary as per accounts need to be compared. Then the lower will be allowed. Next is, Yes, if book profit is more than 3 lakh, then always 2,70,000 will be higher from the first 3 lakh rupees of book profit. In case of firm in loss, if partner has received rupees 1 lakh, in that case, 150 or 1 lakh, whichever is lower, right? Yes, 150 will always be the salary from the income tax purpose. And if the actual as per accounting is 1 lakh, then lower will be allowed. Correct. Why 60% of calculation of balance of 7 lakh, Mr. Mohammed? Because it has been given in the provision that we have to calculate first of all 150 or 90%. Balance will be allowed 60% as per Act. Act say this, okay? Mrs. Suman Goyal is asking, sir, it means that what is allowed as deduction in partnership taxable in the hands of partner, and what is not allowed as deduction is not taxable for partner. It means taxing once. Yes, exactly. Very good question. Very good question, Mrs. Suman. In the partnership case, whatever is going to be allowed for partnership firm is going to be taxable in the hands of partner. And what is disallowed, that is automatically going to be taxable in the hands of the firm. So some amount is going to be taxable in the hands of the firm and some amount is going to be taxable in the hands of the partner. Okay, very good, well done. But whatever is going to be taxable in the hands of firm is going to be taxed at 30% rate. Okay. And whatever is going to be taxable in the hands of partners under PGBP head, that is as per individual slab rate limit. That is going to be taxable like that. So Ruturaj, sir, illustration 12, why full salary is added back and not allowable salary? Because first of all, we have to find out the net profit as per accounting. So after that, you can see that we allowed and disallowed the lower value also. Okay. RTGS, NEFT, these are government transfer limits. I think you should know because we are in a digital mode and you can check it out on Google also. This is the online payment method that is called RTGS, IMPS, etc. via bank. Okay, Vaishali Vindal asking, sir, in this question, allowable salary to deduction is 3,84,000. So, sir, in individual, how partners divide their proportion of salary of allowed or not allowed salary in assessing income tax as individual? Okay, okay, fine. Let me explain you. Suppose there is a partnership firm. Okay, everyone, please focus. Sale, etc. is 50 lakh. Expenses, etc. 40 lakh. Salary to partner A and B, 1 lakh each. That means 2 lakh. Interest to partner A and B, 10%, 20%. Suppose this is 2 lakh. This is 3 lakh. Net profit is now 3 lakh. Okay. Now calculation of book profit. 3 lakh plus full salary need to be added back. Then now interest, because interest is 10% in case of A. So in case of A, there's nothing going to be disallowed because up to 12% is allowed. Now for the purpose of Mr. B, 3 lakh divided by 20 into 8. This is 1,20,000. So 6,20,000 is, so in case of A, nothing going to be disallowed. In case of B, 1,20,000 going to be disallowed. That is 8%. Okay, so 620 is my book profit. Now on the basis of 620 up to 3 lakh, 2,70,000 will be higher, of course, and balance 320, 60%. $192. So 192 plus 270, 462 is maximum salary as per income tax. Now the allowable salary will be lower. This is 2 or this is 462. Lower will be 2 lakh rupees. So 420 will be my net profit. Now, in the hands of partners, what will happen? Let me show you this. In the hands of partner, always allowable portion will come. So in case of A, if we see A, what is allowable portion of interest to A? Full value was allowable because nothing is disallowed. So in this case, on 2 lakh rupees, firm does not pay any tax because full interest was allowed to Mr. A. So Mr. A will pay tax on this interest. So 2 lakh will be your interest income under PGBP head. Both interest and salary will be PGBP head. So 2 lakh is going to be taxable in the hands of Mr. A because full allowed was 2 lakh rupees. And in case of salary, the allowable salary is 2 lakh rupees. So because full salary is also allowable, whatever is an account, that is same in allowable salary. So full salary is allowable. So technically, partnership firm did not pay any tax on salary as well as interest of Mr. A. So that will be the income of Mr. A 4. For the purpose of Mr. B, the interest allowable portion to Mr. B was 1,80,000 because you can see out of this 3 lakh, B disallowed interest is 1,20,000. So that is included in the firm book profit, which has the effect in all automatically net profit. So on 1,20,000, firm is going to pay tax because firm is going to pay tax on 420. And this 420, 120 has been included. So technically 120 was disallowed. So on this disallowed, firm is going to pay tax. But out of this 3 lakh, 180 is allowed. That is up to 12%. So interest taxable in the hands of Mr. B will be 1.8 lakh. And salary, of course, again, full allowed. It was 2 lakh rupees. Sorry, it was not 2. It would be 1 lakh. 1 lakh for Mr. A and 1 lakh for Mr. B. Clear? So that is allowable portion is going to be taxable like this. Suppose the salary, suppose all informations are same and this salary is 5 lakh. Suppose book profit is 620. This is 5 lakh and book profit was suppose 0. No profit, no loss. All figure will be same. Now, because it's 5 lakh, then in this case, allowable salary is not 2 lakh. This is going to be 4.62. So whatever is disallowed, that is going to be automatically part of business income. Suppose the allowable salary is 4.62. Then 50% of this allowable salary going to be the part of Mr. A and 50% is going to be the part of Mr. B. Do not worry, in test our knowledge question, we will discuss these kind of question in detail. So always remember one thing, whatever is going to be allowable portion to the partner is going to be form part of partner's separate income. And whatever is going to be disallowed, that is automatically firm is going to pay tax on that. Clear? Okay, that has been solved. In purchase of land of 1 lakh in cash and 1,10,000, 11 lakh through bank, but they write in contract the cost of land include cash payment also. Whatever they can write in contract, but for the purpose of our PGBP, we can consider the actual cost of the asset for the purpose of depreciation only 11 lakh. The cash part we will not consider. Okay, Miss Akram Ansari. If 90% is also 150, then whatever amount you want, you can take. How does it matter, Mr. Jay Patel? Notes are enough, of course. They have completed the all study material. The salary will be distributed in the same proportion in the as it has been distributed. under accounting. If the accounting salary is equal, then whatever will be the allowed salary will be distributed equally. If there is 40-60% ratio, then whatever will be your allowable salary under income tax will be distributed 40 or 60%. So the ratio will be same as per the accounting salary given. There will be no change in the ratio of that salary. So I guess now we have left with section 41 in this assignment. This is very simple. Then change of currency. This is also very simple. I'm just checking out what we have left for today. Then section 43B. Again, simple provision. There is nothing complicated. Then stamp duty concept. Okay, so now we have left with 4 easy concept, and that we are going to discuss after of course, a short break. That we will start from section 41. Clear? So let's meet after a short break. So, Mr. Akash, can we go for a short break? Okay. Okay, welcome back everyone. So I hope you all must have your tea, coffee, water, etc. So moving on to the provisions, let me take queries if there is any query. Okay, Suman, I have explained the rules regarding the distribution of proportion of salary and interest. So that has been cleared. Next is, so now we have the story time, and after that story, we will move on to our section 41. So we have left with 4 small sections for assignment number 3 of our PGBP. So stories like this, and we all know that story will be in Hindi. एक बहुत बड़े पेंटर थे, वो बहुत ही मशहूर पेंटर थे और काफी एजेड थे, 60-70 ईयर्स। और सबको ही पता था कि वो पेंटिंग्स बनाने में बहुत टाइम लगाते हैं, मतलब, लेकिन उनकी पेंटिंग्स बहुत मशहूर होती, लेकिन बहुत ही परफेक्ट होती हैं। उनकी जो लाइंस होती हैं, जो उनका स्टाइल था, वो बहुत बहुत अच्छा था। तो सब जानते थे कि वो अपनी पेंटिंग्स बहुत डेडिकेशन से, बहुत टाइम लेके बनाते हैं। एक उन जो पेंटर थे, एक दिन वो मार्केट में घूम रहे थे और उधर एक लड़की थी और पुअर थी काफी, बट उसको उस पेंटर की पेंटिंग्स बहुत पसंद थी। तो जब वो पेंटर मार्केट में घूम रहे थे तो उस लड़की ने उन्हें रिकॉग्नाइज कर लिया। तो वो उनके पास गई, उसने बोला कि मैं आपकी बहुत बड़ी फैन हूँ, मैं आपको बहुत फॉलो करती हूँ, आप इतने बड़े पेंटर हो, प्लीज मुझे एक ऑटोग्राफ दे दीजिए, एक्सेट्रा। तो जब वो ऑटोग्राफ उसे दे रहे थे तो ही नोटिस्ड कि इसकी फाइनेंशियल कंडीशन अच्छी नहीं है। ही लुक एट हर एंड ही थॉट कि इसको फाइनेंशियली लगता है कि क्राइसिस है। तो उसने अपना पेंटर ने अपना कैनवास निकाला, बैग में था उनके पास, और उन्होंने 10 मिनट में एक पेंटिंग बनाई और उस बच्चे को दिया, उस लड़की को, और बोला कि इसको मार्केट में जाके बेच दो और 5 लाख रुपए मांगो, 5 लाख रुपीज, यू विल गेट 5 लाख रुपीज। उस लड़की ने जब वो पेंटिंग ली तो उसने कहा, सब तो कहते हैं बहुत टाइम लगाते हैं पेंटिंग्स बनाने में, तब इनकी पेंटिंग्स इतनी कॉस्टली बिकती हैं, इनकी रेपुटेशन है। ये 10 मिनट में पेंटिंग बना के मुझसे बोल रहे हैं कि ये 5 लाख में बिक जाएगी, हाउ इट्स पॉसिबल। उसने कहा ठीक है। तो पेंटिंग को लेके एक आर्ट गैलरी में गई, उसने वहां के जो ओनर थे उसको दिखाया कि ये उस पेंटर की पेंटिंग है, साइन भी थे उनके नीचे। तो उस पेंटर की पेंटिंग्स को उन्होंने देखा, आर्ट गैलरी के जो टेक्नीशियन थे, और रियलाइज किया कि हाँ उन्हीं की है, क्योंकि उनके जो लाइंस होती थी वो बहुत परफेक्ट होती थी, जो कॉन्सेप्ट होता था वो बिल्कुल रिजेंबल करता था उनकी थॉट से। तो उस आर्ट गैलरी वाले ने उस लड़की को 5 लाख रुपए दिए कि ठीक है, मैं इसको 5 लाख में खरीदने को तैयार हूँ। नो, गर्ल वर वेरी सरप्राइज कि सब कहते हैं कि ये तो बहुत टाइम लगाते हैं पेंटिंग्स बनाने में, ईयर्स लग जाते हैं बनाने में इनको पेंटिंग। इन्होंने 10 मिनट में बना दी पेंटिंग, मतलब इतना इजी है इनके लिए ये काम करना। 10 मिनट के इतने सारे पैसे मिलते हैं। तो वापस वो दौड़कर उसको ढूंढने गई पेंटर को, और उनके घर पहुंची। घर पे जाके उसने कहा कि मैंने आपकी पेंटिंग को सेल किया एंड आई गॉट 5 लाख रुपीज, बट सब तो कहते हैं कि आपको बहुत टाइम लगता है, बट आपने 10 मिनट में बना दी। तो उस पेंटर ने कहा, इस 10 मिनट के लिए मैंने 30 ईयर्स प्रैक्टिस करी है। तो मैं, लोग ऐसा कहते हैं कि मैं बहुत टाइम लगाता हूँ, बट सच में मैंने इस पेंटिंग के लिए 10 मिनट में नहीं बनी है। ये अभी आपको लग रहा है कि आई जस्ट मेड इन 10 मिनट्स, बट इसके लिए मेरी 30 साल की मेहनत है। उसके बाद मेरे पास आज ये कह सकते हैं कि टेक्निक है, या वो मेरे पास नॉलेज है, जिससे मैं 10 मिनट में ऐसी पेंटिंग बना सकता हूँ। लेकिन इट टुक्स 30 ईयर्स। तो ये सिर्फ जो आपको 10 मिनट दिख रहे हैं ना, ये 10 मिनट नहीं है, ये 30 साल का मेरा हार्डवर्क है, जिससे अब मैं काम कर सकता हूँ। सो यू रियलाइज्ड कि जब भी हम किसी सक्सेसफुल इंसान को देखते हैं तो हमें लगता है इसके लिए यह काम कितना आसान है, ये 10 मिनट में इतने पैसे कमा लेता है। बट ऐसा नहीं होता। सक्सेस कभी भी शॉर्टकट से नहीं मिलती, बस हमें उसके पीछे की स्टोरी नहीं पता होती। वंस यू विल बी अ चार्टर्ड अकाउंटेंट तो किसी को पता नहीं चलेगा कि आप किन किन तकलीफों से निकले, व्हाट स्ट्रगल यू हैव। जब आप फेल हुए तो कैसा लगा, जब हमारे ग्रुप नहीं निकले तो हमें कैसा लगा, फिर हमने पढ़ने के लिए कितना स्ट्रगल किया, अपनी प्रॉब्लम, फैमिली प्रॉब्लम्स, एटसेट्रा एटसेट्रा। किसी को नहीं दिखता, किसी को दिखता है तो बस जो पर्सन सीए बन गए, उसकी सैलरी 2 लाख रुपए महीना, किसी की 5 लाख रुपए महीना, ये तो कमाल का काम है। बस एक साइन करने के हमें पैसे मिल जाते हैं, 10 मिनट में हमने एक रिटर्न फाइल किया और हमें पैसे मिले। तो लोग लगता है, अरे इतना सा काम के आपको इतने पैसे कैसे मिलते हैं। तो कभी किसी को ऐसा लगता है तो मैं उसको ये बोलता हूँ कि मैंने जो काम आपका अभी 10 मिनट में किया, जो कंसल्टेंसी मैंने आपको अभी 10 मिनट में दी, जिससे आपको इतने रुपए का फायदा होगा या आपको ये बेनिफिट होगा, वो 10 मिनट नहीं है। उसके लिए मैंने अपने स्टार्टिंग से 12th के बाद से लेके अब तक के इतने सारे ईयर्स इन्वेस्ट करे। इन 2004 आई बिकम चार्टर्ड अकाउंटेंट, सो टेक्निकली 20 साल का एक्सपीरियंस एज अ सीए, उससे पहले की पढ़ाई है। इवन आप स्टार्ट कर सकते हो स्टार्टिंग से, लाइक फ्रॉम 10th, फ्रॉम 9th व्हेन यू स्टार्ट ऑप्टिंग फॉर कॉमर्स एक्सेट्रा। तो वो उतने साल की मेहनत है, वो 10 मिनट नहीं। सो वेन एवर यू सी अ सक्सेसफुल मैन, नेवर थिंक ये इतना इजी होगा। सबको मेहनत करनी पड़ती है, इवन इट्स विराट कोहली हो या वो कोई भी हो। तो विराट कोहली आज क्यों है? बिकॉज बहुत मेहनत की होगी उसके लिए। किसी भी बॉल पे शॉट मार के सिक्स मारना हमें लगता है इतना आसान होता है खेलना, इतना ये आउट कैसे हो गया, इसको तो खेलना चाहिए था। बट सपोज वो लोग कितनी मेहनत करने के बाद उस पोजीशन पे आते हैं। सो दैट वाज द स्टोरी फॉर द डे। लेट्स मूव ऑन टू द प्रोविजन फॉर द डे नाउ। Section 41, it says profits chargeable to tax, remission or cessation of a trading liability. So if there's a trading liability which ceased, which you can say you need not to pay now. So in that case, that if there is any trading liability which ceased to exist, then that much amount will be treated as your business income in the year in which the cessation occurs. Why it happens or how it happens? Very simple case. All the provisions are now simple under PGBP. It says, suppose Mr. A in previous year 22-23, he purchased some goods on credit. Fine. So that was suppose 10 lakh rupees purchase on credit. So that means in this year, the balance sheet must show the creditors 10 lakh rupees. He did not pay this amount of purchase in this previous year. So creditor will be 10 lakh rupees. In previous year 23-24, and after this purchase, he paid tax on suppose 11 lakh rupees net profit after deducting and allowed, disallowed, any other thing. So on the basis of this purchase, he claimed deduction of 10 lakh rupees. And due to this purchase, there is a creditor of 10 lakh rupees. After that, he paid tax on 11 lakh rupees. Clear? Now, the next year, suppose this creditor had died. The creditor does not exist now. So there is no need to pay this 10 lakh rupees. We need not to pay any liability of this creditor now. Suppose due to any situation, due to any case. So in 23-24, my trading liability of 10 lakh has ceased to exist. Now income tax says, because on the basis of this trading liability, you have claimed 10 lakh rupees. That means you have decreased your net profit by 10 lakh rupees because it has been considered as purchase in previous year 22-23, but now you need not to pay this. So if you need not to pay this, then we will not allow you any deductions. So this cannot be changed because we do not have any time machine. So the impact of this cessation of trading liability will be, it will be treated as your income in the year of cessation. So your 10 lakh rupees will be increased. Suppose out of this 10 lakh, only 6 lakh needs to pay, 4 lakh is not need to pay. Then 4 lakh will be your deemed income under this section. Clear? So if there is any trading liability cease to exist, it will become your income. Clear? If it is a loan, suppose it's not a purchase, it was a loan. We have a loan also from Mr. A, rupees 5 lakh in previous year 22-23. And now we do not need to pay any loan due to Mr. A has died, suppose. Then this will not impact your P&L account because we did not claim anything regarding this in our last year P&L account. So if anything which does not affect our profit, and if that liability ceases to exist, because that is not a trading liability, that's why we do not have effect of this loan case. So only those trading liability which has been allowed as a deduction in the any previous year, if it is ceased to exist in any financial year, any previous year, that will be your income. So any allowance or deduction has been made in any assessment year in respect of loss, expenditure, etc., trading liability. The main idea is this, that should be allowed as a deduction that has an effect to reduce your profit. Then only in the year it which cease to exist, it will become your income. Very simple provision. You should read the provision. Balancing charge, sale of capital asset used for scientific research. We have discussed these provision earlier also. Clear? Change in rate of exchange of currency, cost of the asset difference adjust due to increase or decrease in the currency price. So we had made a contract with someone to purchase any machinery out of India for $1 lakh after 3 months. So we made a contract till now, and suppose the rate is 81 rupees per dollar till now. So we assume the cost will be 81 into 1 lakh rupees. At the time of payment, suppose the currency rate change. Now it 82 rupees. So if that is written in the contract that any change will be reduced or adjusted at the time of payment, then because due to 1 rupees has been increased, the cost of asset should be increased. And if the reversed happen, the rate has been changed up to 80 rupees, then the 1 rupees value should be reduced from the cost of asset. So if there is any change in the currency, then due to the change of that currency value, the adjustment should be made in the cost of the asset. Simple provision. There is nothing. This section provides that where an assessee has acquired any asset from a foreign country for the purpose of his business profession and due to change thereafter, in the exchange rate of two countries involved, two currencies involved, there is an increase or decrease in the liability at the time of making the payment towards the whole or part of the cost of the asset or towards repayment of the whole or the part of the money borrowed by him from any person directly, indirectly. So we have to adjust that value in our actual cost of asset in section 43(1). That's it. The amount of capital expenditure, to which expenditure this contract relate, the adjustment need to be done. Next, section 43(B), that is deduction based on actual payment basis. So this section 43(B) has a notwithstanding clause. Somebody asked me in the day before yesterday, what is the meaning of non-obstance clause? So that is non-obstance means notwithstanding clause. That means which clause having the overriding effect. So section 43(B) comes with an overriding effect. It says that if any expenditure has been allowed as per the previous provision, whether it's section 36, whether it's any section, and the section 43(B) consists some expenditure. There is a list of section 43(B) expenditure. If any expenditure falls under section 43(B) list, then the deduction will only be allowed if it has been paid. You cannot claim that expenditure on due basis. Like under section 36, there was a concept of bonus and commission, interest on capital borrowed. We read the provision that the bonus or commission will be allowed, interest on loan will be allowed, whether it's for term loan or current CC limit, etc. But now section 43(B) covers bonus and commission as well as interest on loan. So that means 43(B) says that this deduction was allowed as per section 36, but because section 43(B) has the overriding effect, so interest on loan only allowed if it has been paid. Bonus or commission only allowed if it has been paid, because 43(B) has the overriding effect on all the previous section. Certain deductions to be made only on actual payment basis. There are the certain list, and if these payments has been debited into the profit and loss account, then it should be allowed under income tax only if it has been paid. If it is not paid, if it is due, you cannot claim the deduction. The following sum allowed as deduction only on the basis of actual payment within the time limit. What is the time limit? Same as per previously we discussed. If the payment has been made, in all these cases, I guess 7-8 cases are there. If the payment has been made up to due date of ROI, then deduction can be claimed in the same year. Otherwise, in the year in which it is going to be paid. So first expenditure is any sum payable by way of tax. Tax means indirect tax. We are talking about GST, custom duty, etc. That is tax. Duty means any payment of duty to the government, like stamp duty. Clear? Cess means, of course, the cess upon the indirect taxes, or the fee means by whatever name called under any law. Fees, that does not mean advocate fees, CA fees, no. It's that fees which is applicable under any law, like municipal fees, registration fees for companies, etc. The fees which is received by the government. So in all these 4 points, you can see the common thing that the pay is the government. So if you are going to pay there, if you're going to take deduction of these amount, tax, duty, cess or fee. So deduction will be only available if you actually paid that. You cannot claim the deduction of any payment, tax, duty, cess or fee on due basis. You have to pay it if you want to claim the deduction. Next point number B. You might have remembered when we discussed section 36. In that section 36, there was a concept of contribution to provident fund or other approved fund. Contribution, 2 parts were there, employee contribution and employer contribution. And I told you employee contribution is section 36 and employer contribution section is 43B. So this is section 43B, employer contribution. Did you remember the provision? What was the provision? It says, if the contribution is deducted and deposited up to due date of ROI, employer contribution, then deduction can be claimed, and if otherwise in the year in which deducted and deposited. The same provision is from 43B. So 43B diagram we have already made with the section 36 provision when we discussed earlier. So here I am just trying to remind you that we have discussed this provision, and this is any sum payable by assessee as an employer by way of contribution. That was employer contribution part. For employee contribution, section 36 says, to any provident fund or superannuation fund or gratuity fund or other fund for the welfare of employees. So first point was duty, taxes. Second is employer contribution. Third is bonus or commission for services rendered payable to employees, or any sum paid by the assessee as an interest. So interest, bonus, commission, taxes, cess, and employer contribution. These reduction can be claimed only if it has been paid up to due date of ROI. D, E, and F all connected with the interest part. Any sum payable by assessee as an employer in lieu of earned leave, leave encashment under salary topic. So if that has been paid by the employer to the employee, only in that case deduction can be claimed. I've told you, in case of salary, there is casual leave or medical leave every month. You can retain that, but the payment will be made at the time of retirement. So deduction of that casual leave cannot be allowed on due basis to the employer. Only at the time of retirement or at the time of payment, he can claim the deduction of that leaves. Any sum payable by assessee to the Indian Railway for use of railway, that all expenditure from number A to H will be allowed only if it has been paid up to due date of ROI. If it is not paid up to due date of ROI, then deduction will be claimed only in the year in which it has been paid. Like an assessee may collect GST from customer during the month of March 2024. However, in respect of such collection, he may have to discharge the liability only within, say, 20th April 2024 under the GST law. The explanation covers this type of liability also. Consequently, if an assessee following accrual method of accounting has created a provision in respect of such liability, the same is not deductible unless remitted within the due date specified in this section. So March GST you need to pay into April. So till 31st March, it is a liability. You cannot claim that GST deduction. If it is paid up to due date of ROI, then you can claim the deduction. Here is the question regarding it. Hari, an individual, carried on the business of purchase and sale of agricultural commodities like paddy, wheat, etc. He borrowed loan from Andhra Pradesh State Financial Corporation, an Indian bank, and has not paid interest as under. So Mr. Hari has taken the loan but did not pay the interest. So now what happened? Andhra Pradesh State Finance Corporation interest 15 lakh is due. We cannot claim deduction. This is also due. Now the provision says both APSFC and Indian Bank, now they have make a contract with Mr. Harish with restructuring contract for loan facility, converted the above interest payable by Harry to them as a loan repayable in 60 equal installments. So he decided that we will pay this interest in 60 equal installments. So 15 lakh going to be paid in 60 equal installment. That means 25,000 each. This one, and 30 lakh, that means 50,000. Clear? During the year ended on 31st March 24, Hari paid 5 installment of APSF and 3 installment to Indian Bank. So he paid 5 of this, that means 25,000 to 5, 1,25,000. And 3 of this, that means 1,50,000. Hari claimed the entire interest of 45 lakh as an expenditure while computing the income from business of purchase and sale, if any allowable. So of course, this is wrong. He cannot claim 45 lakh rupees as a deduction. Only 1,50,000 and 125. That means 2,75,000 can claim as deduction as per section 43B. Balance is going to be disallowed. You can see the answer. This is a theoretical part. You need to read it. So that was 20,000 and 50,000. Total eligible amount for deduction is 2,75,000. Balance is going to be disallowed. This is the new point which has been inserted. You can say it's a new amendment in 43B, point number I, which is regarding section 43B, clause number H. Any sum payable by the assessee to a micro or small enterprises beyond the time. So if I am running a business with microfinance and small enterprises, and I have purchased some amount from that organization and claimed it as a deduction, then as per this specific act, the limit specified in this is 15 days. Within 15 days, we have to pay the amount, or as per the agreement, which cannot be exceeding 45 days. So anyhow, we have to pay within 45 days the payment to that micro or small enterprises. Those are registered under Small and Medium and Micro Enterprises Development Act 2006. So if we are not able to pay the amount, if we have purchased anything from micro or small enterprises, and if we are not able to pay, then we cannot claim the deduction until we pay the amount. So section 15 with example will make you understand. It says Micro, Small and Medium Enterprises Development Act 2006 mandates mandatory payment of goods or service to supplier being a micro or small enterprises by the buyer on or before the date agreed upon between them in writing. So there will be a contract in which it has been written that within how many days the payment will be made, but which cannot be exceeding 45 days. This is the maximum time. The payment cannot exceed 45 days, which cannot be more than 45 days from the date of acceptance of the day of deemed acceptance of any goods or service by a buyer from a supplier. If there is no such written agreement, then the 15 days will be assumed for the time of payment. So if there is no agreement and 15 days has been passed on, then you cannot claim the deduction on the due basis. You have to pay it. And if it is per agreement, the day is 40 or maximum 45, then you have to pay payment within 45 days. If it has not been made, the deduction will be disallowed or deduction cannot be claimed. If the sum payable by SSC to a micro or small enterprise is paid as per written agreement, maximum 45 or 15, the deduction can be claimed on accrual basis. If within 15 days, the year is ending, then deduction can be claimed on accrual basis. However, if the sum payable by the SSC to a micro or small enterprise is not paid as per the agreement, or within 15 days, in the case of no agreement, the deduction would be allowed in the previous year in which it is actually paid. Like Mr. A has purchased goods of 10,000 from A and Company, a micro enterprises on 1st March 2024. Now, as per the agreement between, they have decided the payment date should be 5th April 24. Now, Mr. A follows mercantile method of accounting. So, if Mr. A paid the sum on 2nd April 2024, that means before the agreement date. Agreement date was 5th April. You have to pay by 5th of April, but you have paid on 2nd of April. So since Mr. A paid the sum on or before 5th April 24, deduction can be claimed in previous year 23-24. But if the amount has been paid after the date we have decided, that means after 5th of April, the amount has been paid on 20th April, then this deduction will be allowed in the previous year 24-25, not in the previous year 23-24. So that's a new amendment. So I personally believe a 1 marks question or 2 marks question or the provision regarding this can be asked in the examination also. This is the meaning of medium manufacturing enterprises, etc. Now we have last topic of assignment number 3 of PGBP, that is regarding section 50C applicable to capital asset, section 43CA for builders and developers. So what is the scenario? What is the concept of this section? We are reading section 43CA, and exactly the same section has been drafted under section 50C in case of capital asset. So under capital gain, when the section 50C will come, I will not explain that because exactly the copy paste provision we are discussing under section 43CA. So what exactly happening here? It says if there is any land and building. So if you are a businessman and you have land and building, at the time of transfer, what will be the sale consideration of this land and building? Because for land and building, there is a value which is called stamp duty value. That means government value. That means circle rate value. You might have listened that word, stamp duty value. That is value as per government rules. And one is consideration. So what should be the sale consideration for the purpose of PGBP if it's a land and building and you are using that land and building as your stock in trade? So exactly if that land and building is not your stock in trade, if it is in your asset, then at the time of transfer, what will be sale consideration for the purpose of capital gain? Exactly the same provisions applicable what we are discussing over here under section 43CA. Exactly copy paste provision has been made under capital gain also. The difference is when your land and building is stock in trade, then PGBP will decide the consideration as per section 43CA. If it is your capital asset, then section 50C will decide your consideration. But the method, the concept, the provisions are exactly same, except it is for stock in trade, it is for asset. This is section 43C, this is section 50C. Except this, there is no difference. Now, if suppose the consideration, I am transferring my land and building, which is my stock in trade, and the consideration is suppose 50 lakh. And the government stamp duty value is 60 lakh. Then what should be considered? What should be considered as the sale consideration for the purpose of PGBP under section 43CA? This is the provision. I have made a diagram for it for your purpose that will make things easy for you, of course. 43CA. So 43CA talks about if your buildings, immovable property, land and building is your stock in trade, then at the time of the transfer, the sale consideration will be as per section 43CA. It says, case A, if stamp duty value, that will be given in question, if stamp duty value exceeding 110% of consideration. For example, consideration is 100 lakh, suppose. Stamp duty value is 115 lakh. So that means this condition fulfilled. So if this happens, then the sale consideration will be stamp duty value or consideration, whichever is higher. That means stamp duty value will be your consideration. B case, if stamp duty value does not exceed 110% of consideration, in that case, suppose this is 100 lakh, this is 105 lakh. So in that case, stamp duty value or consideration, we do not need that. In that case, consideration will be this will be your sale consideration. C case, if fair market value is less than stamp duty value, that means actual fair market value of that property is lower than the stamp duty value. For example, the stamp duty value is 100 lakh and the market value of that property is 85 lakh only. So he is getting the consideration also 85 lakh. So in this scenario, case 1 will not be applicable. Even that it's more than 10%. You can see the consideration 110% of consideration, its stamp duty value is higher than this. But if it has been proved that consideration is less than 110%, but this is also the FMV, the real value is 85 lakh. There is no manipulation. Whatever assets he is getting is 85 lakh. And why he is getting 85 lakh? Because this is the market value. So we have to prove that fair market value is less than stamp duty value. If it has been proved, then in that case, FMV will be sale consideration. So this stamp duty value exceeding consideration will be applicable if the FMV is more than 100 lakh. So suppose in example A, FMV is 100, then again 100 will be taken as the sale consideration. So there are technically 3 cases, A, B and C, and in all 3 cases there are common provision. The problem is this, that stamp duty value of 2 days generally given in the question. In the case of immovable property transaction, there is one thing that's called registry date, and one is called agreement date, which is generally done before registry. So first of all, the parties meet and they decided for an agreement, registered agreement, and then the registry has been actually undertaken after some time. So there might be an agreement. So agreement date is always before the registry date. There might be directly registry date, but in general there is agreement date and then the registry date. Now the problem is this, suppose the agreement date is on 1st October 23 and registry has been made on 1st February 24. Now stamp duty value on the agreement date was 110 lakh and on this date it has been changed 100 to 18 lakh. Now the question arises, for these 3 cases, the stamp duty value we need in all these 3 cases, this. So which date stamp duty value should be considered, on the date of 1st October 23 or 1st February 2024? So for this purpose, a common provision has been made that if at the time of agreement, the payment has been made via check, the advance payment, there is some advance, 5 lakh, 2 lakh, something. If any payment made via check, then this date stamp duty value will be considered. But if nothing has been paid via check, advance has been paid in cash only, there is no check payment has been made at the time of date of agreement, then the stamp duty value on the date of registry will be considered always. So for the purpose of stamp duty value, either we need to take the agreement date value or we need to take the registry date value. So it depends that at the time of agreement, if payment, any part of payment has been made via check, IMPS, RTGS, any bank mode, then the date of agreement will be considered for the value of stamp duty value. And if otherwise, that means no payment has been made via check, everything advance has been paid by cash, then date of registry will be taken for the purpose of stamp duty value. So that is the provision. We have example also 4 or 5 in this case. So this concept will be clear. So stamp duty value of land and building to be taken as the full value of consideration in respect of transfer, even if the same are held by the transferor as stock in trade. Section 43 CA talks about it. It says, however, the stamp duty value does not exceed 110% of the consideration. then the real consideration will be your sale consideration. So if stamp duty value exceeding 110% of consideration, then stamp duty value will be your sale consideration. Further, the agreement date concept is here, where the date of agreement fixing the value of consideration for the transfer of the asset and the date of registration of the transfer of the asset are not same. So that means we have a agreement date separate and a registration date separate. The stamp duty value may be taken on the date of agreement for transfer instead of the date of registration for such transfer, provided at least a part of consideration has been received by way of an account pay check, ECS, etc. The assessing officer may refer the valuation of the asset to a valuation officer if the value cannot be ascertained. If the value is in dispute, then that case can be shifted or can be transferred to the assessing officer. Then the value decided by the officer can be the sale consideration. But if the stamp duty value is lower, then that stamp duty value will be the sale consideration. So if the case has been sent to the valuation officer, then the valuation officer value or the stamp duty value, whichever is lower, is going to be your sale consideration. So if the case has been transferred to the valuation officer, then valuation officer value or stamp duty value, whichever lower, can be your sale consideration depending upon the circumstances. These are the questions. Let's solve it. You can see date of transfer of land and building held as stock in trade, 1st September. We have transferred the property on 1st September. Clear? So 1st September 23 we transferred. Actual consideration was 100 lakh. 10 lakh received by the account pay check on 1st July 23. So because at a time of agreement, the 10 lakh has been received via check. So the stamp duty value of 1st July 23 will be considered. Actual consideration 100. Now we have given the stamp duty value on 1st July also and 1st September. And because the payment has been received by a check, so this value is irrelevant. Now the comparison will be 120 and 100. So stamp duty value in this case, you can see exceeding the 110% of consideration, because 100 lakh is the consideration. What is 110%? 110 lakh. So stamp duty value is 120. This is 110, exceeding 110%. So which is taken as higher. That means stamp duty value will be my sale consideration. Next. Second example. Now the date of registry again, 1 September 23, 100 lakh, the amount received is in cash on 1st July. So because it is received in cash, so stamp duty value on the 1st July is irrelevant now. Now the stamp duty value on date of registry will be taken. And now it's 130 lakh. Consideration was 100. 110% of this will come 110. Stamp duty value again exceeding the consideration. So stamp duty value, that means whichever is higher is going to be your sale consideration, that is 130 lakh. The details of theoretical provision has been written over here. Next example. Now the registry date is 31st January 24. 10 lakh received by account pay check on 1st July 13. That means 1st July 13. So this value 24 is relevant. Now the stamp duty value will be 109 lakh. The consideration was 100. So 110% of this will be 110. So the stamp duty value is 109. So it does not exceed the 110% of the sale consideration. So in that case, if stamp duty value does not exceed the 110%, then the consideration will be your sale consideration. That means 100 lakh will be your sale consideration for section 43CA. Next is example 12. On 31st March 24, information has been given 100 full amount received in cash. Again, because the full amount received, so date of Advance is irrelevant. Date of registry will be taken. That is 130 lakhs. So stamp duty value is 130. Consideration is 100. It is exceeding 110%. That will be 110 lakh. So that is sale consideration for the purpose of section 43CA. So that was assignment number 3. What we just discussed, section 43CA. I am again telling you that when we will discuss capital gain, there will be section 50C. So at that time, we will not discuss the provision, because exactly the same provision what we just discussed in section 43CA is copy paste in section 50C. The change is just there is stock and trade consideration we are finding. In the same way, we will find the consideration for our capital asset as a land and building. So let me take some queries if there is anything. Santosh Das, sir, I am currently selling LIC policy. Then say that what will be our priority in terms of taxation? I cannot answer these kind of question. I have to answer only those questions which is regarding our topic and syllabus. You are asking a practical problem. Okay. For that, I'll charge fees. Okay. Next is Ruturaj saying, sir, but under normal accounts also same entry is reversed. Then why section 41 repeats the same? Section 41 does not repeat anything. The PGB provisions talks about their concepts. If it is same in the accounts and income tax, it's well and good. It might be different also. Like for office expenditure, there is no different provision under income tax and accounting. So there is salary, same provisions for income tax and accounting. So section 41 is just to tell you that income tax will recognize that as an income. It does not say that in accounts it's different. So suppose if section 41 does not here, then what will you do? Then you cannot treat that as an income because section is not there. So income tax and accounts, if there is some provision that might be same in both cases, so income tax is just explaining what we will do, like as CSR activities. So income tax was telling that we will not allow CSR as a expenditure. It is disallowed. Accounts allowed it. Suppose after 1 or 2 years of amendment, accounts also disallowed that. Then still CSR provision will be under income tax. The section will still remain the same. It will not abolished. It is not going to be removed. That accounts and income tax are same. No. Under chapter PGBP, we just discuss what income tax consider as an income and expensive. They might be having same provision as per accounting also, but it does not matter. We are just expressing our provisions. Okay. Next is Manoj Kushwaha, respected sir, please send live classes schedule for intermediate paper 5 and 6. Manoj ji, please send a mail to the Board of Studies or Institute. They will provide you the schedule. Okay. Ruturaj sir, are you GST lectures on YouTube relevant to study for May 2024 for examination? Kindly ask this question to your GST faculty. Next is Swati Krishnan D. Sir, section 30 to 36 is both scheme or optional? This is for both scheme. In the sections from 30 to 36, if there is any provision which is only for optional or default tax regime, that has been notified in the respective section already. Like section 35, scientific research. In that case, if you are outsourcing the scientific research activity, that deduction will be available only under optional tax regime. In same section 35AD, 35AD is not available to the default tax regime. So I have explained, I have noted in every section if there is any difference in default tax regime and the non-optional tax regime. So I have notified in the end of the every section. If the section is silent, that means that benefit, that deduction is available under both regime. Next is limit of minimum advance payment amount. I don't think so. There is any limit. For checks, we are taking the date of agreement. If the consideration amount has been paid via check, then that date will be considered to find out the stamp duty value. So Ati asking for checks, why we are taking the date of agreement? Because it has been prescribed in the law. We cannot question the law. We have to follow the law. Okay, the law. Next is Ram Jha, sir, when I watch your video, I understand all things, but when I read module, confuse, everything is same. If I'm teaching you, I am actually all my notes, you can see this is all the questions, all the provisions, everything has been copied from their study material. I am not inserting anything, but I am just making some summaries for the section to make you understand the things in easy way. That's it. Otherwise, everything has been copied. All the language, everything has been copied from the study material. It has been beautifully drafted. What I am doing, I am just inserting some pictures. So you will feel interested, you will feel good when you see the notes. Or I am making some kind of summary for the provision, like even it's for section 40A or for partnership firms. So it will be easy to you to understand. Or I am making charts which I am uploaded on the portal. So that chart presentation will make the thing easy to understand. That's it. Nothing else. I am doing nothing else. So studies perfect. You should go through the studies, remember the provision, but the overall structure is exactly same, whether it's my notes or the study material. If you are able to solve all the questions in your illustration, your test your knowledge, and previous year question papers and your mock test, then it will be enough. So even you are reading from my notes or study, both are exactly same. There's no difference. Jay Patel, capital gain will be taught. Yes, capital gain and income from other source, both chapter will be going. I am going to take the classes for both chapter also. Okay. So we have completed our topic number 4, topic unit number 3, and now we have left with our unit number 4. That will be a theoretical concept majority. There is only one section 44AD, ADA, and A. That is a numerical topic, a very small topic, of course. Everything else like 44AA, this is regarding the theoretical concept that who needs to maintain books of account, that we will discuss in our next session with our test knowledge questions also. And then section 44AB, which talks about the audit case. Who needs to conduct audit, tax audit under Income Tax Act. And then we have section 44AD, etc. And then the last is our agricultural income provision. So majority of provisions are just theoretical based. Only 24-25 pages topic is this. So that we are going to cover in our next session, definitely. And in the next session, there will be an MCQ also. There will be test your knowledge questions also from the study material, and we will complete our this provisions also. So after the class, I suggest you, you should go to the Buyos portal, download the chart or diagrams. And even if it's not available till now, then it will be available, of course, till the evening. So you should go download and take the print of that. Like there are 4 pages. If you take print of that, and please read with the print of those charted. So that will be really easy to understand. Printout should be in your hand. So you can mark that which topics we have already covered. And you will be able to understand all those provisions very easily if you will take the help of the chart and diagram. So have a good day. Please take care of yourself. We will be going to see each other on 5th of December now with our last session of PGBP, and after that we'll see each other on capital gain and income from other sources. So please stay safe, study very hard, take care, good day, goodbye. So Mr. Akash, can we close the session?